Anish Gupta, the CEO of Liberty Shoes, joins us now. A lot of these corporates, of course, will benefit if the GST rate comes down. Mr. Gupta, before I ask you about your own fundamentals, we're expecting the GST rate to be at about 18% or even below. If it comes through, then how much of a positive could it be for the industry and for companies like yours?
I think let me begin by saying that, this government, what they are trying, I would like to start with, giving some macro picture. I think what this government is trying is to create the demand through increasing GDP. If you look at, one rank, one pension, and also you look at, the minimum wages being increased in states, and also, the GST bill, which is around the corner, I think they all are pointed towards 2 to 4% growth in GDP. And if that happens, automatically we see a larger growth and in the economic agenda of this government. Okay. As far as GST is concerned, what we are talking about is 18% or let's say 20% GST, which is a very, very positive, let's say outlook. Because
do you save,
the total tax?
Yeah, Mr. Gupta, do you save anything by way of warehousing or anything? Immediately, does it benefit you, the GST, if it comes through?
See, if the GST comes, automatically there is a uniform taxation across the country in terms of the total tax on the footwear. Now, as far as logistics is concerned, actually it is not a real concern for us because the logistic cost is not really very, very important or is quite big enough that it impacts the demand. But what is more important is that today on footwear, it is considered as a luxury item. The total tax on footwear we have calculated is about 25%. So you can imagine that if the GST rate is about 18 to 20%, it can be a big booster for the demand as well as for the margin model, which is not there as of now for the whole supply chain. Yep. And I think the GST can be a game changer for the footwear industry in general.
But for a company like yours, demand has been very, very sluggish. In fact, in the quarter gone by, your revenues have fallen almost 30%. How do you see the second half of the year?
Well, let me correct this way. There are three verticals of the company. One is the domestic business, the second is the institutional business, and the third is exports. As far as domestic business is concerned, in our own retail stores, which are about 125 in numbers, we have seen almost about 30% growth in our own stores, whereas in the same store, which is normally what we value always, there is a 10% growth in the value and volume, which means that the demand in the retail stores is rising, and that also gives us a confidence that there is a huge confidence in the brand. And even in the recent brand equity survey, we saw that we are ranking quite good. So I believe that the consumer mindset and the consumer behavior as well as the confidence in brand is very much there. Now, if I look at the Q2 numbers, there is a sharp drop because there was one institutional order of school shoes, which is a very low value item to the extent of 40 crores, which we missed out because the tender got postponed from the Tamil Nadu government. And all these tenders, which are normally we call as jackpot orders, if they do not come, then naturally, maybe a big, draw towards the bottom line or the top line goes down.
All right. Okay, Mr. Gupta, then let me iron that out. For the full year, do you think you will be doing more revenues than last year? And will you also do more profit? Because in second quarter, both went lower on a year-on-year basis. For the full year, will you be able to report higher bottom line and top line?
Well, I'll put it this way, because quarter three is one of the most important quarter for the industry or for this sector in particular, because the value and the volume both goes up. What we have seen so far in the retail or wholesale, there's a huge growth in the retail format we have, and also in the wholesale the business has picked up because the Diwali season, the wedding season, and this healthy season which is there is a comforting for us, and we hope that the H2 numbers should be quite encouraging for us. As far as the profitability is concerned, we have seen that we have the EBITDA margins are quite intact. So as such, the margin model which we have made is quite intact for going forward. So we believe that we will be able to match the numbers of at least H2 as well as also for the whole year going forward. And also the EBITDA margins will be intact.
All right. Okay, Mr. Gupta, we will have to leave it at that, out of time on the show. Thank you very much indeed for joining us. Well, as we wind down on the markets, wind down on Bazaar, the markets are in ship shape, you will have to say, and the best performer really is the Bank Nifty. Nothing to do with GST. Clearly it is that, you know, many of the problem assets like Ratnagiri or Lanco Infratel are all seemingly moving out of trouble or getting into lesser and lesser trouble. So Bank Nifty, a standout winner and the top performer, Bank of Baroda